Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group for the first market update for 2023. Happy New Year. So on this channel, we talk about all things property, but most importantly, I read the news and separate the facts from the fiction so you don't have to. In today's video, we'll be taking a closer look at the latest trends, developments and opportunities in the Australian property market. Whether you're a seasoned investor or just starting out, you'll gain valuable insights and information that will help you make an informed decision about your next property investment. We'll be exploring the latest data and statistics, as well as analysing the current market conditions to help you stay ahead of the curve. We'll also be discussing the latest government policies and their impacts on the property market and providing expert advice and tips to help you navigate the market with confidence. So if you're interested in staying up to date on the latest developments in the Australian property market, you won't want to miss this webinar. So sit back, relax, and get ready to learn all about the Australian property market with me, Jay Pace. So let's get straight into it, back to the great sport that is property, and let's talk about what happened last year. So Australian property was 5.3% lower over the calendar year of 2022. So certainly not the doom and gloom that we've been hearing for the past 6 months. And to give you some perspective of the year prior, we actually finished 22.1% higher. And remember, I always say this, there's markets within markets. So there's going to be some areas where property performed better and some areas where property performed a lot worse. But this would have been the average, okay? Now, let's look at the monthly change in dwelling values from the end of 2019 to 2022. So in February 2020, COVID was declared a pandemic, and we all remember that fresh hell that's still in our brains. From October 2019 to November 2020, the cash rate was actually cut by 65 basis points to an emergency low of 0.1%. Those were the good old days. Now, in May 2021, consumer sentiment started to peak, okay? And in October 2021, APRA tightened its serviceability assessment, which I've talked about in a few different videos now, and I'll talk about it again in this video. In November 2021, inflation passes 1% per quarter, and in May 2022 to December 2022, the cash rate starts to rise. Now, obviously, it's still rising, and today we had another rise, which I'll talk about in a moment. Now, this chart shows the comparison of previous peak to trough declines in national dwelling values. Since the first interest rate rise, national dwelling values have fallen by 7%. Now that's overtaking the 2008 to 2009 downturn in the GFC, which a lot of you may or may not remember, as the steepest national decline on record. So we've survived the steepest national decline on record so far. Now this is the equivalent of a fall in the median dwelling value across the nation of about 53.5 grand, or bringing values down to around $714,000. Okay. Now, the new capital city listings added to the market over the 4 weeks ending January 29th were 22.2% lower than over the same period last year. So that's 24.5% lower than the previous 5 years. Now, every capital city recorded below average number of listings through January, reflecting an ongoing reluctance from prospective vendors to actually test the market. So people are just a little bit too scared to sell at the moment. Now, Sydney actually has 40.6% less stock than it usually has on the market at the moment. Melbourne, 39.8% less stock than it usually has. And Brisbane at 36.5% less. Now, that's the largest quarterly drop in relative amount of stock that we've seen in the same period to last year. Even Domain's share price actually dropped because they're not doing enough listings. Now, this is very opposite to everything that we've been hearing for the past couple of years. Everyone's going to sell their properties. We're going to see a market drop by 30%. How can a market drop if no one's actually selling anything? Now, CoreLogic's National Rental Value Index rose by 10.2% over the year to November. Now, this is the highest annual rental growth rate on record. And I remember someone saying that rental yields were going to go up quite significantly during COVID. That was me. Now, CoreLogic released their best of the best report in 2022 with some of the strongest annual sales turnover and value on record. Now, just having a look here, we can see Vaucluse. There was a sale there at in February last year at $62,750,000. $62,750,000. What do some people do for work? This is insane. The highest sale price for 2022, as I said, was 38A Wentworth Road, Vaucluse. Yep, go on realestate.com, look at the photos. It's pretty amazing. $62,750,000. Now, this house last sold 20 years ago, 2002, for $4 million. That's not a bad investment. Okay, yes, there's been some work done, but still, that's a 1,468.75% increase in value, or $58,750,000 over 20 years, making its owners almost $3 million richer every single year for 20 years. Now, interesting how the report from CoreLogic didn't mention this Point Piper purchase. Now, this property was previously purchased 27 years ago in 1996 for $9.2 million, and it smashed records back then. But this sold last year, ladies and gentlemen, for $130 million. It's a $121 million profit or increase from the last sale price. Now, let's talk about interest rates. And yes, it makes me sad too. Today, the RBA, less than an hour ago, announced its first rate rise of 0.25% for 2023. So our cash rate is now 3.35%. We expect about 3 more rate rises and a 4% peak cash rate. Now, if you hear that and you think, the handsome man on my phone just told me not to buy until the new financial year. You heard wrong. Borrowing for you will only get harder, and as buyers feel more confident that interest rates are reaching their peak, there will be more competition in a market with already historically low levels of stock. So what the handsome man is telling you is to buy now. Now, let's take a look at the winners and losers of the month. So CoreLogic's National Home Value Index fell a further 1%. So the smallest actual month-on-month decline that we've seen since June last year. And the slow in the rate of decline was pretty evident across most capital cities, except for Adelaide and Perth, where housing values have shown little volatility since rate rises began in May. And we've been talking about Perth for a while now on this series, just about how we're buying there, and I think there's some good value. Now, if we have a little bit of a look here, Sydney's median dwelling value dropped below $1 million for the first time since March 2021. And that's falling 1.2% in January, which is an improvement on its December 1.4% decline. Now, based on the monthly index, the National Home Value Index is down 8.9%. Now, it peaked in April, okay, making this the largest and fastest decline in value since 1980, which is actually when CoreLogic started its recording all of its data. Now, despite the recent sharp drop in values, every capital city and the rest of the state region is still recording home values above pre-pandemic levels. So it's not time to sell the house and buy a farm out in the sticks, people. We're going to be okay. Now, let's stare into my crystal ball and look at the reasons why you should be investing in 2023. 1, household savings are still at record highs. So total household wealth has surged 35.5% since the beginning of COVID-19 pandemic to a record $14.9 trillion at the end of March 2022, which is when the ABS recorded that data. Now, despite having less than 0.5% of the world's population, Australia is now home to 3.5% of the world's millionaires, and that's continually growing. Importantly, there are still lots of people interested in buying property. So look at these financials, okay, these approvals. Note that this excludes refinance. This is only approvals for people buying or wanting to buy. So this is still at close to record highs, over $28 billion of of finance was approved last month, meaning there are new buyers in the market with a budget of over $30 billion. Note that smart strategic investors and upgraders are not disturbed by this stage of the cycle. They understand real estate is a long-term game and they're getting in it while the competition is asleep. So they're more focused on long-term rises of values rather than short-term slumps. And that's what you should be. News cycles are very short. This is why we hear bad news come in and go out. Something else comes in and goes out. Don't look at the property market based upon a news cycle, okay? Property demand from home buyers will continue. This chart shows that housing finance approvals are still very strong compared with the last 12 years. And there are still more buyers in the market for A-grade homes and investment-grade properties than there are properties for sale. So this underpins value for property moving forward. Some discretionary buyers are out of the market, but people are still getting married and they're getting divorced, they're having babies, they're needing new homes. Property markets are going to keep going. Okay, investors will definitely keep buying. Finance approvals for investors are down, but they're still high. And personally, I've just done another refinance because I bought another property late last year. And in the last month, investor loan approvals fell very little. But a total of $9.3 billion of new loans was approved for investors just last month. Now, in January 2022, APRA released data stating that the majority of Australians are ahead of their mortgages by nearly I think it was just over 3 years. They said almost 4 years. I'm just saying nearly over 3 years. They were ahead of their mortgage repayments. And then if we continue to talk about mortgage stress, Matt Comyn, the CEO of CommBank, said last year that many CBA customers had a natural buffer with a $250 billion to $260 billion in aggregate savings nationally. More importantly, though, he said that around 3/4 of his loans and borrowers are approximately 2 years ahead of their repayments. So there's that nice buffer there, okay? And what about debt levels? Is that actually a problem? Well, the total value of Australian residential property is currently $9.5 trillion, and it grew the fastest pace on record in 2021. Prices rose 23.7% as an average in 2021, and prices have increased by about $2 trillion in just 1 year. That was that 1 year where all the other experts were telling you the market was going to drop and don't buy. That's when it increased the most on record. So they don't have a great history in my books when it comes to calling the market. But here's a really important number. The total number of loans against all of the residential property in Australia is $2.1 trillion. So we have a very low loan to value ratio, about 23%, which is very sound and conservative. The number of home loans listed, the number of homes listed for rent across the combined capital cities is currently the lowest on record. Many capital cities are recording vacancy rates of less than 1%. And you'll remember in our November market update, we explored vacancy rates and I explained that a balanced market's 3%, anything below that is high demand. We are buying in suburbs for our clients at the moment where the vacancy rate is less than 0.5%. Now, record low unemployment, Australia's unemployment rate has fallen to 3.4%, underscoring the resilience of the economy amid a record series of interest rate rises by the Reserve Bank. Now, if we reflect on its slower economic growth forecast, the Reserve Bank has upgraded its unemployment forecast and is now expecting unemployment to creep up to about 4.5% from where it is now. Now, that is still sub 5%, which historically is extremely low. Rents have seen the steepest annual increase on record. I mentioned that before, but I want to show you the numbers. This table shows house rents across Australia with double-digit annual rental growth recorded across most markets. According to research by Domain, we've seen the steepest annual rental increase on record at 14.6% for houses and 17.6% for units across combined capital cities. Now, you may recall from our November update that we discussed vacancy rates. As I said before, rents will increase strongly. We're already seeing this. All my rents have gone up. All of our clients' rents are going up. Australia is experiencing a significant rental shortage. As our international borders open, we're definitely going to see more and more demand on rental housing. But if you take a look at the table, only 39,000 vacant properties are currently available in Australia. Okay, that's down from 59,000 a few years ago. Where are the 300,000 new immigrants going to live? National vacancy rates are at 1.3%. And remember, a balanced market's 3%. That's a big problem, but a big opportunity for investors and for landlords. The Australian Bureau of Statistics figures show that dwelling approvals have also crashed down 15% in the year to November last year. Build cost inflation continues to show through, but there are signs that this has started to slow, and the national average approval value for a house actually hit record highs of $434,000 to build, which to me still sounds cheap, but I guess it depends on your initial reaction as to how much a building's going to cost in the suburbs that you know best. But it increased by 100 grand last year, which is crazy. Now, the drop in approvals has come at the same time that the Albanese government has committed to the largest temporary and permanent migration program in Australian history, which has already seen annual immigration return to pre-pandemic levels. Now, we are inviting more people into our country, and the latest federal budget estimates 235,000 net overseas migrants for 2023, and that's already likely to be surpassed by to 300,000 for the financial year. Moreover, the Department of Home Affairs has finalised over 2.78 million visas since June last year. Now, this includes some 90,000 skilled workers, work-related visa applications. So all I'm saying here is that all this data, all this pressure on demand with the lowest levels of supply, it's only going to push property prices higher. And as Jennifer Love Hewitt screamed at the end of the 1997 classic film, I Know What You Did Last Summer, I join her in saying, what are you waiting for? What are you waiting for? Now, if you like what you've seen here and you want to be kept in the know with the Australian property market, make sure to like this video, hit that subscribe button so you can see more of my face. Now, if you would like to further your education, you can download our ebook. Now, the links are in the YouTube description below. I want to thank you for your time today, and I will see you next month.